A trading system may be based on any of the three following trading concepts: sentimental analysis, fundamental analysis, or technical analysis.
Sentimental analysis tries to gauge the sentiments of the traders in the market.
Most sentimental traders rely on their long trading experience or gut feeling that they feel the next move of the market.
The lack of solid trading rules makes this concept restricted only to very experienced traders.
Fundamental analysis studies the economic, political, and environmental factors that affect the price of their financial instruments. This concept restricted only to very experienced traders.
For example, a high interest rate monetary policy might see the corresponding currency surge higher.
On the other hand, an unstable political system could see the corresponding currency decline.
Fundamental analysts are interested in the intrinsic value of their instrument. In other words, the price where the financial instrument should be trading at.
If the price is trading higher than the intrinsic value, then it's considered overpriced. If it's trading lower than the intrinsic value, then it's considered underpriced.
The third type of analysis a trading system is based on is technical analysis. Pricer chart.
Technical analysis itself can be broken into three principles. Firstly, market action discounts everything. Secondly, prices move in trends, meaning there are obvious trends on the charts, even if the markets move sideways sometimes and don't trend 100% of the time.
Finally, history repeats itself. That is, charted patterns that performed well in the past are expected to work equally well today and into the future.
Which concept is good for you to use in your trading system? The answer is simple: the one you are most comfortable with.
Learn to trade consistently. Master the financial markets with Britt Online Trading Academy. Subscribe for more.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.